Hello and welcome to this very special interview. My guest today is a private equity money manager, but he's not just any private equity money manager. He runs what is effectively one of India's oldest private equity funds, started in 1999 with a corpus of $35 million. It now manages assets in excess of $2 billion. I'm talking about India Value Fund Advisors. When you talk to people in the trade, you obviously hear a lot about this fund, their achievements, and the kind of companies they've picked up along the way over the last 17 years. But they're also extremely shy. This actually is the first television interview of India Value Fund Advisors managing partner Vishal Nevatia. Vishal, thank you very much for your time. It's a pleasure.
Thank you. Most welcome. Thank you for inviting me.
Vishal, I want to start with, I think, what is known as one of the characteristics of the India Value Fund Advisors, which is the fact that a large majority of your investments are in control type situations where you actually own majority of the business, and you also actively run the business. This is in sharp contrast to how majority of the private equity actually works, which is invest the money, sit tight, and let the existing CEOs, teams, etc. run the business.
Right.
Why is that so?
I think the most important reason for that is our passion for building businesses. Right from day one, when we started the firm, we felt that if we can create a business model where we can consistently help build admired businesses across economic cycle, it will be a wonderful journey. It will be very good for all stakeholders. We'll be able to create a lot of value for them, and more importantly, it will be very satisfying to look back and say that we were associated with so many wonderful businesses. So that's one of the reasons why we created a business model where we are actively engaged in supporting businesses and transforming them into large size.
Was it a conscious decision?
Absolutely.
Right. Absolutely. But when you started out, did you find that only a small percentage of companies and people who founded the companies that you met were actually capable of scaling those businesses up on their own and they needed help?
Absolutely. So I think our view in the last 17 years become even stronger is that if there are 100 mid-sized businesses which have been created now, which need to be transformed to large size, 20 to 30% of the entrepreneurs have the desire and the capability to make it large. Because at this stage, the business needs to be professionalized and institutionalized. The balance 60 to 70% of the entrepreneurs either are too tired because it takes a lot of energy and effort to build even a business from zero to mid-size, or they have tried institutionalizing it but have not been very successful.
And you actively have built a bench strength of CEOs, CFOs and other top level executives who you can tap into to actually run these businesses that you acquire, right?
Absolutely. So we did two things. One is we created a unique business model because we looked around and we saw that on one hand there were conglomerates. We were very good at business nurturing. But when we spoke to the leadership there and senior leaders in those conglomerates, they say one of the things they don't really like about it is they spend too much time in bureaucracy and politics, but great business nurturing skills. Then we looked at private equity funds. So they were very sharp, nimble and focused, but had very limited business nurturing skills. So we said, can we combine the two and have a firm which on one hand is very sharp, nimble and focused like a private equity fund, and also has the business nurturing skill of a conglomerate.
The vast majority of our viewers, for example, are retail shareholders who own a certain amount of shares in the company. But nothing significant, right? To effect a certain change or anything. What do you have to say about that type of investment? I mean, where you're basically at the mercy of the promoter, etc.
The key to success there, in our opinion, is choosing the right entrepreneur or the management team to back. If your interests are aligned, if you have the right management team with the right value systems and capability to transform business, then you don't need to be in control. You can very much be a passive shareholder and you should do very well.
Public markets, there is always this chase for multi-baggers. Right? I mean, stocks which can go up 10x, 20x, find them small and watch them grow and make a lot of money. What was your advice to our viewers who kind of everybody loves multi-baggers, but how often do you find them and how do you?
One is to make sure that you find the right entrepreneur and the right management team which has aligned value systems and capability to truly make that business last.
So it's not looking at the business first.
Yeah, it's first looking at the entrepreneur and the management team.
Okay.
In our view, 80% of the weightage should be to the quality of the entrepreneur and management team, and 20% to everything else.
Okay. Okay. So a great team, they may be any business, but
Yes.
they more likely than not would end up doing a good job.
Absolutely. So we think if you are with a great entrepreneur management team, and it's very important to define great very well. Okay. Most important thing for us is to have aligned value systems. Entrepreneurs and management teams who are willing to do things the right way. Second, they should have real hunger to succeed. They should be extremely passionate. They should be people who really want to make that business big. Third is their ability to attract talent. Because no one person can build a great business. So can they attract, retain and nurture great talent in their companies?
You were also earlier discussing, you were saying that it's better if the entrepreneur has all of his skin in the game.
Yes.
In that one game.
Yes.
That you want to partner.
Yes.
Could you just explain that?
Absolutely. So if there is one entrepreneur who has just one business and you are invested with him, then whatever happens to that business makes a significant difference to his life. Versus an entrepreneur who has 5 businesses and you have invested in one of his business. If this business doesn't do well, it will make an impact to the entrepreneur, but it won't be life changing for him.
Correct.
So he may not sort of move heaven and earth to make that business successful.
Correct.
Whereas if he's just focused on one business and you are with him on that business, then he's going to move heaven and earth to make that business successful. So that's the reason we believe it's extremely important to focus on alignment of interest between the promoters and the
shareholders. I mean, okay, fair enough. Are there any no-go areas for you? So you found an entrepreneur.
Yes.
But are there any no-go areas in terms of businesses that you wouldn't?
Yeah, I think there are lots of no-go areas for us because we believe that it is very difficult to do too many things well. So it's always good to focus on few sectors. Okay, because that's where you can understand the sectors well. That's where you can know management teams well and so on and so forth. So we largely focus on 4 sectors which are very common. One is healthcare services. Second is financial services. Third is consumer-oriented businesses. And last, which we are just trying to build capabilities on, is technology, products and services.
Okay. I'm going to get to some examples from each of these sectors in a bit from now.
Sure.
But Vishal, just talk about valuations, because that is the other sort of constant complaint rather.
Yeah.
Valuations are just too high. I mean, for the growth that businesses are generating, even in consumer businesses.
Yes.
Right, consumer-facing businesses.
Yes.
Is that a problem you find in private markets as well?
Absolutely. I think to a great extent there is a huge correlation in valuation between public and private market. And in general, valuation in India have always been, last 20-25 years if you look at it, they've always been expensive compared to other EMs, China and other markets. And in the last few years, given all the liquidity around the world, valuations have become even more of a challenge. Everywhere in the world and particularly in India. Having said that, we think if one is patient, okay, one can still find relatively reasonable valuations, and I'm choosing my words carefully. I don't think one can find cheap companies.
So, I mean, in a way, this is essentially priced as a growth market, which it is, rather than a value kind of
Even
market.
compared to the growth, if you say the fact that there is an ex-EM market which is growing at 20% and India is also growing at 20%, even for the same growth, India would be at a premium. And there are different theories why investors now for decades are willing to pay a premium for Indian market, but I don't think anybody yet has a proper fix
as to why
there's always been a premium in India compared to other EMs.
4 sectors that you outlined, right? Financial services, healthcare, consumer, tech products. I mean, if I take financial services and consumer,
yes,
I mean, valuations are expensive, right?
But post demonetization, if you see, there has been a significant correction in financial services valuation. One can still say that some of them are expensive, but relative to
where they
November 8th, I think they are far better than.
But compared to say, or a 5-year average or a 10-year average,
they continue to be. I think the view seems to be that with all the public sector banks having a lot of balance sheet stress, the private sector companies have a very good opportunity in financial services to grow, and they will do very well for 3 to 5 years.
A company in the financial services space.
Yes.
FinCare, right?
Yes.
It's a microfinance company.
Yes.
Which is also now got into other products, securitized products, etc.
Yes.
Can you just talk about that? What was the play? What is the logic there?
Yeah. So I think we have always been quite positive on the base of the pyramid, place where we think that lot of people do not have access to financial services. So the unbanked population of India. So we said, can we build a business which is one of the most trusted business for the unbanked? And that's where we bought 2 to 3 microfinance company back in 2012. And unfortunately, immediately after we bought, there was a huge crisis in the industry called
the Andhra Pradesh, yes.
The Andhra Pradesh crisis.
Yes.
But we really believed in the business. And we took steps like we were the first company to go into CDR before everybody else sort of went into that with a clear sort of vision that we want to get out of with the first also. And we did that very successfully. And today the company is 10x the size of what it was in 2010. And we have an outstanding management team as a partner there.
Sure.
And RBI has also given us a small bank license.
Bank license. Okay. In the microfinance side, is there political risk?
Absolutely. I think given that you're dealing with the base of the pyramid, there is always political risk, and that's where we believe that it is extremely important that FinCare and companies in that space need to be very, very socially responsible and sensitive. So for example...
But as you yourself said, in 2012, something happened, the entire industry got affected.
Yes. Yes.
That was one particular company.
Yes.
From which it spread.
Yes.
But then the entire industry got extremely hit.
Absolutely.
Why can't that happen again?
Yeah. So few things. One is I think the regulatory framework compared to 2010 and now is very different.
Okay.
Okay. Now RBI is the sole regulator for that. They have come up with very good guidelines which are balanced between growing the industry and investor protection. So we think the regulatory framework is in a much stronger shape. But yes, this is a segment which does have relatively higher political risk than other parts of financial services.
Any other segments within financial, because it's such a large space,
yes,
right? Where you see a great
So we
opportunity.
also see a lot of opportunity in SME financing.
Okay.
We see opportunity in mortgages, both affordable and prime mortgages. We are quite positive on insurance, different, especially general insurance segment. So these are the other segments which we are actively looking to build businesses.
Let's just talk about the consumer space, right?
Yes.
Consumer-facing businesses. You have a business called ACT,
Yes.
which is a high-speed fiber internet company.
Absolutely.
Right?
Yeah.
Operating in Bangalore.
Yes. Yeah, it operates in the southern states,
Okay.
which is Hyderabad, Bangalore, Chennai, and they've just entered Delhi now. So they are the fastest growing wired broadband service in India. And the idea was when large telcos are all focused on wireless, okay, there is an opportunity to build a wired service, because finally for homes and for offices, nobody can compete with fiber to home.
Sure.
Because the kind of speeds and bandwidth and the pricing you can offer on that is far, far better than the wireless, which is a more mobile service. So today they are adding more subscribers every month compared to everybody else put together.
Do you have a view on, telecom? Because when we talk about telecom, one just kind of nowadays focus on fixate on data.
Yes.
And because we saw a big growth numbers, but that growth has kind of slowed down. Now you have Reliance Jio, which is in the market.
Yes.
I mean, the entire space is in a fair bit of upheaval.
Yeah. So most of it is right now still focused on mobility. So all the big players are fighting for broadband, which is wireless. Okay, and that's the big price. And with wireless service, you can reach a lot more people. Whereas a wired service is an extremely difficult network to build, because you have to build home by home.
Sure.
Okay, and it is like a trench warfare. So our view is that the larger telcos are currently focused on mobility. By the time that market settles, they would focus on the wired one, because that is absolutely essential.
Sure.
We cannot be a country in which we are only dependent on wireless broadband. We will all need a wired broadband service and a wireless service both at the same time.
Correct.
for us to be really effective, get great bandwidth at effective prices.
Sure.
So we think once they finish that, they will focus on this space, but by then, if we can become true leaders in that space, then that will be a very valuable and interesting business.
Interesting business. Let's come to the other area, which is healthcare, right?
Yes.
You have an investment in a company called DM Healthcare. It runs pharmacies, clinics in the Middle East.
Yes.
They also have 2,000 beds in India.
Yes.
What is your view on that space? Because we've seen many listing in the public markets recently.
Yeah.
In the diagnostic space, for example.
Right.
Right. I mean, we have a couple of hospitals listed.
Yes.
What is the opportunity we're talking about?
Yeah. So we have been investing or been building businesses in this space since inception. So our first investment in this space was in 2000. Okay, and we have consistently seen that if you are in the right place with the right doctors, so location and ability to attract the right doctors is most important. If you have that, then you can really build a business which is very sustainable and can consistently grow at 20-25% per annum. So we are continuing to be very positive on it, and we think that for next 10 to 15 years.
Because we have a couple of them listed, Fortis, for example, Apollo, for example.
Absolutely.
Right,
and you can see the fact that Apollo has in particularly done very well.
Very well.
Even Fortis from a growth perspective has done very well. So if you look across all the large players who are well run and who are executing well and having no issues growing.
So one of the big challenges nowadays which get discussed is the issue of disruption.
Yes.
Right? You have a large established player, but who's trying to come up? Who's a new guy?
Yeah.
How will the business look like?
Yes.
Not very far in the future, but over the next 2 years or so. One of your most famous investments was Meru Cabs, which we all know about, which we all have sort of availed services of at some point or the other. But that has now been completely eclipsed by the Olas and Ubers of the world. Tell us what happened there and what is the learning?
Yeah, sure. So I think we started building Meru Cabs in 2008, and we were able to very quickly get into a position where we changed how people saw taxi service. And we reset the standards for taxi service very quickly. We became the largest player, and we were by far the largest player till 3 years ago. The next player would be less than half the size of Meru, and that's when Ola and Uber came with their app-based thing. And Meru was also technologically very evolved. They also launched their app very much within a month of.
So what was the difference?
Yeah, the key difference was capital. Okay. Ola and Uber came in with a view that they can cut prices for consumer by half and increase driver payout by 2 to 3x, and that will really help them build the network and grow very fast. And that meant the fact that they need to lose significant amount of money. So today it is our estimate that Uber and Ola are both losing $20 to $30 million a month each.
Okay.
Whereas we chose to stay profitable for two reasons. One is we didn't have that kind of money to burn. And secondly, we felt if we raise that money from outside, we have a fiduciary capacity. So unless we are very confident that we can convert that money into a great business, we shouldn't take that money. And we are not confident that burning money at this pace for such a long time
is the right
can in the end deliver a very good, profitable and a valuable business.
Okay. What is the plan for Meru now?
Yeah, so we continue to remain profitable. We continue to focus on segments which make us profitable, and we think there will be a time when both Ola and Uber will decide not to burn the kind of money they're burning, either because they're running out of cash or they have also concluded that it doesn't make sense to burn. And at that time it will be a level playing field once again, and we can grow back.
A lot of Indian startups have raised this issue of capital dumping recently.
Yes.
Do you believe that is true?
Absolutely. So we do believe the fact that there are companies which are using capital power in almost a monopolistic way, and that can harm some other businesses which do not have the capital or do not willing to burn the capital.
Well, some of the companies who have raised this issue of capital dumping are themselves funded in large majority by outside investors.
Yes.
Foreign investors.
Absolutely. So I think they're raising it now because they are no longer able to raise more money to burn. So they feel that this is the right time to raise that.
The government needs to, can the government do anything here?
Absolutely. So I think there are laws in the country which talk about the fact that predatory pricing is illegal. Okay, so clearly one can approach Competition Commission and make a case that there has been capital dumping and there is predatory pricing, and the Competition Commission has the ability to stop that.
Why hasn't it already happened?
See, this is a new, the entire Competition Commission as a regulator and the law related to that is very new to India. And capital dumping itself is a very new concept in the country. So I think it will take some time for Competition Commission to fully understand the issue, figure out what is the right action under existing law. So it is something which will take some time.
But do you think it will happen?
We think so. I think if capital dumping continues, there will be a reaction from the Competition Commission, and they will provide appropriate protection to business over a period of time.
Fair enough. One other issue with regards to the new age businesses is, I'm just using this as an example, what has happened at Flipkart.
Yes.
Where one of the investors has actually now taken charge.
Yes.
Right? According to people we've spoken with, that has kind of sent down shivers amongst the startup ecosystem.
Right.
New age marketplace business, etc., etc. Sure. What is your view? Is that the right thing for investors to do? And what was the need for that?
Yeah. See, I wouldn't know specifics of Flipkart, so I wouldn't want to comment on is it the right thing which was done in Flipkart or not being done in Flipkart. But in general, our belief is the fact that businesses at different stages of evolution require different skill sets. It is very difficult for one person, and there can be exceptions, and there are exceptions we know about, where people can transcend phases of the businesses. So someone who is great at doing a startup may not be necessarily good at running a large business.
Sure.
Okay, so you need a different manager or a different mindset to run a large business versus you need a very different mindset to do a startup. Can one person do both? Generally no, with few exceptions.
Vishal, thanks very much for your time. It's really a pleasure speaking with you. Thanks indeed.
You're most welcome. Thank you.
Thank you.